Hi there. I hope you and your family are staying healthy and managing during this difficult time. We're starting week 3 of our self-isolation, and this is a period of time where it may start to get difficult for many people. So it's very important that we make sure we take the advice of our health professionals by eating properly and getting enough sleep, exercising, and help managing our level of stress. And it's during these volatile times that financial uncertainty can also be an added stressor. I can help alleviate some of that stress for you by sharing how we have built your personalized plan to include strategies that address risks to your long-term goals. Now, we can't control what happens in the markets over the short term, but if you understand how we manage your plan to meet your long-term objectives, you can face the future with confidence and stay the course. That's what this presentation is about. I really wish that you will spend the time to go through it in its entirety, as I think we all have a little bit of time on our hands. Now, as market volatility increases, investors typically have a natural tendency to move into safer investments, hoping to avoid further losses. Reacting to short-term market noise by making dramatic emotion-based portfolio changes can have a negative impact while trying to achieve your long-term goals. Now, history shows that by maintaining discipline and perspective during market downturns, a patient investor will be the one rewarded when markets return to an upward path, which they always do. So this year, we're experiencing significant volatility as a result of the global health pandemic. This exogenous event has created uncertainty, and during uncertain times, the world's stock markets tend to decline in the short term. That's why it's so important to have a diversified investment portfolio. When you diversify globally as well as by asset class, it creates stability in the portfolios during times like we're experiencing today. Now, it's important to note that what you're seeing on television or reading in headlines is not necessarily what you're experiencing in your portfolio. Why? As highlighted in this slide, the broadest Canadian stock market, represented by the S&P/TSX Composite Index, was down approximately 20% for the year as of this taping. However, many of our managed solutions are only down by a fraction of that amount. Proper portfolio construction reduces risk and provides downside protection. For the last 11 years, we've been enjoying one of the longest economic expansions and strongest bull markets in history, but you wouldn't have known that on March 9, 2009. On that day, the S&P 500 index was down by 50% from its previous high, and many people believed that capitalism had failed. Taxpayer dollars were being used to bail out the global financial system, and the forecast for the future was at best bleak. There was little optimism for the stock market, as it was believed that economies wouldn't grow for many years to come. However, since March 9, 2009, we've had one of the greatest and longest bull markets in history, but also since that time, investors have lived in constant fear of the next financial crisis, as you can see in this slide. Now, we have endured many events that seemed to be at the time permanent barriers to future financial success. In each one of these instances, and many others, the first reaction of the stock market is to decline. But then markets eventually rebound. And in fact, over this ongoing cycle of crisis and recovery, markets have continued to reach new highs. As the graph demonstrates, the S&P/TSX has delivered an annualized return of approximately 9% since 1956 and has proven to be resilient through even the worst market conditions. Over the same period of time, there's been many instances where the S&P/TSX has declined by more than 10%. Now, as the chart illustrates, this has happened 24 times since 1959 and the 9th time in my career alone, and yet each time the market recovered and achieved a higher level. Throughout history, equity markets have experienced periods of volatility. Yet despite this, they continue to be resilient. Staying the course is extremely important during periods of volatility, as this disciplined, patient approach enables investors to fully recover from these periods and achieve long-term investment goals. The question I like to ask is that if you could go back in time and knowing what we know now, what would you have done to have capitalized at the downturns of the past? Now, most people would answer, if I had money, I probably would have bought more. And at those times, you would have been right. But what if you don't have money, or you didn't have the opportunity to buy during those lows? That is where our world-class sub-advisors come in, and we have some of the best and largest asset managers in the world managing your investments at this time. What they are doing is they're currently looking for opportunities because they are very well capitalized. Many of the strongest market returns occur in the period immediately following a sharp decline. This is when individual investors are typically feeling the worst about what is happening. And since 1950, following the worst 12-month periods of performance by the S&P TSX, the market made solid gains just 12 months later, with only one exception. And within 5 years, the markets were up significantly, meeting and exceeding long-term return expectations. Now, in order to take advantage of those returns, it's important for investors to continue focusing on their long-term plan. You have to stay the course and you have to remain invested. Those who exit the markets, even for a short while, risk missing great opportunities when the markets recover, as it's impossible to accurately time the market over the long haul. So staying invested is key. Now let's go through the 5 principles of your living plan that have stood the test of time through all market conditions. Number 1, use time to your advantage. Time is your greatest ally. 2, diversify your portfolio. Making sure you don't have all of your eggs in one asset class or country is imperative. Number 3, avoid emotional decisions. Most of the decisions we make off emotion are not the best ones. What we need to do is follow logic. Number 4, maintain a long-term focus. The reason is your IG Living Plan is designed to last your entire lifetime. And number 5, stay invested. This is how you win, and this is how you succeed. Now let's unpack these principles one by one. Investing for the long term is one of the best strategies for offsetting the impact of short-term market volatility. Financial markets can quickly move in and out of favor, and staying invested ensures you're always capitalizing on the upside of the market and reducing the impact of short-term market volatility. Although the probability of negative returns in the short term is relatively frequent, the following chart illustrates that more importantly, the probability of earning a positive return greatly increases as the investment term increases. Said simply, in the shorter term, markets are very unpredictable. However, over the longer term, they're very predictable. They're positive. Now, deciding what to invest in can be a daunting task at best. So whether you're a new or experienced investor, investing in a diversified multi-asset portfolio removes the guesswork of how to successfully invest over the long term. I have shown many of you this chart in the past, and I'll continue to do so as we move forward. What this chart demonstrates is that in many instances, the top performing asset category changes every year. As well, asset categories that are among the best one year could be also the worst the next. While others can remain somewhat consistent year over year, it is impossible to choose ahead of time. By diversifying across different asset classes and investment styles, investors can offset overall risk, and they can also increase their portfolio returns by balancing exposures in both positive and negative markets. Using a thoughtful approach to portfolio construction will properly diversify your assets and reduce the negative effects that any individual security or asset class may have in your portfolio's performance. Financial markets don't always move in the same direction. By carefully diversifying your portfolio, we can reduce your risk and enhance your chances of successfully attaining your long-term goals. Now, if you look at this chart, you only experience the roller coaster ride of emotion if you allow yourself to get distracted by it. There is an old saying, buy low. Note from this illustration, when a typical investor is feeling the worst, feeling despair, nauseous, or dejected, it is also the point of the greatest opportunity. This is the paradox when it comes to successful long-term investing. Since 1948, the S&P TSX has experienced 50 positive years, and this compares to only 22 negative years. In other words, it has provided positive returns more than 2/3 of the time throughout its history. These are great odds. In the chart, you'll also notice the annual returns since 1948 are plotted within their respective ranges of returns. The result is a fairly normal distribution in what is statistically referred to as a bell curve, with most returns staying within the range of around 0 to 10%. In particular, look to the far left-hand side and notice how the S&P TSX declined by 33% in 2008. Now, the following year in 2009 saw the pendulum swing completely the other way, with the S&P TSX returning a positive 35%. Generally, negative returns tend to be followed by positive returns, and these positive returns are also typically greater than the negative returns. That's why it's so important to stay the course to achieve your long-term investment goals. All investors love the prospect of a rising stock market. However, once the market declines and prices approach historical lows, many investors become defensive and retreat to the perceived security of cash or money market instruments. While nobody enjoys watching markets decline over the short term, this chart clearly demonstrates that those investors who can focus on the long term and stay invested are the ones that stand to gain. For example, an investor who remained fully invested in the S&P 500 index from January 1st, 1990 to December 31st, 2019, which is basically 30 years, they realized a 7.7% annual return excluding dividends. Conversely, an investor who missed the 50 best days of the S&P 500 over that time period, that's only 1% of the trading days, realized an annual compound return of a negative 0.4%, excluding dividends. So by missing a tiny fraction of the trading days, they will give up all of their returns. That is why timing the market is difficult. In fact, it is next to impossible, as you need to be right twice. You need to be right when to get out, but you also need to be right of when to get back in. Get either of those wrong and your returns suffer. Time in the market is what is essential, and that is why staying invested is so critically important. A combination of discipline and perspective is the key to reaching your long-term investment goals. In contrast, obsessing over daily market fluctuations and short-term noise, it can be a surefire way to fall short of your goals. One way to achieve this fine balance is by having a long-term plan and then, most importantly, sticking to it through all market conditions. While this may sound simple, recent market conditions have put investors to the test. I understand. Veering off course from a carefully thought out plan can turn a temporary loss of confidence into a realized loss in an investment portfolio if you panic and lose your focus. Every IG living plan that we develop is developed with a holistic viewpoint and is synchronized across all aspects of your financial life. When you have a holistic financial plan developed specifically for you with the expert advice, you know when and how to act, and you can be confident in the decisions that you make. This is the reason why I developed a consistent, thorough financial planning process that we call the WISE Advantage. There is only two important things to know. One is that I have a process, and two, I stick to it consistently. We are in this with you. IG Wealth Management has tested our approach with cutting-edge predictive software, and we've partnered with the leading investment managers from around the world to help deliver results. Together, we can work on creating and maintaining this plan that's the most suitable for your unique circumstance. As you know, we take a team approach to building your plan. This puts you at the center always. We use our team's expertise plus the experts that we have in all areas of financial planning at our head office to help produce not only what are good, but also extraordinary results. We also believe that coordinating your personal financial plan with your personal advisors, like your accountant or lawyer, will also help ensure that we're all working together on your behalf. This ensures we can move quickly, and to do so with complete conviction and confidence. It's important not to be distracted by the headlines, daily news, and constant fluctuations in world stock markets. Remain focused on your IG living plan. We have built this plan for you. The plan should be reviewed on a regular basis, as we do, and especially during times like today. This way we can ensure you're on track and also to make sure we can achieve your specific goals and dreams. Your plan will provide the clarity on how to stay the course and capitalize on any attractive opportunities that also present themselves. Your regular investment statements serve as a snapshot at a moment in time. For example, you'll soon be receiving your investment statement for the end of March, and it will show you the value of your portfolio on that particular day. During market downturns, it's natural to feel nervous or unhappy if you see a financial loss in your statement. I definitely understand how you feel. For many of you, we've been through this many times in the past. But I also want to remind you that this loss exists on paper only and is not realized until a decision to sell is made. So a loss is not a reality until you actually sell. And as your plan has been designed for the long term, our recommendation is to resist any active impulse and to stay invested. We use a financial planning process called the WISE Advantage, which is proprietary to us. It is using this process that we're able to help build your IG living plan, but more importantly is that once it is built, we also need to stress test it. We call this a Monte Carlo. So we use our leading edge financial planning software to determine the probability of success of your current plan. This advanced technology is available for you, and we use it all the time. Most projections that are created by software will use averages. So as an example, if we project within your plan a 5% compound average annual rate of return, The software will simply model your plan as if we're going to achieve this 5% rate of return each and every single year. Now we know that this isn't reality because some years will certainly be higher, but other years will also be lower. So in other words, you'll experience fluctuations in returns from year to year, and these fluctuations, or what we simply call a sequence of returns, matter. So we run several rigorous trials of how you could achieve the compound return you have projected. We want to model current events like we're going through today so that we can then best determine the probability of achieving your goals. Our focus is to get your plan as close to 100% as possible. This will help you look toward the future, and it'll help provide you clarity and confidence. Over the course of your investment years, there are only a limited number of times when major market corrections will lead to highly attractive investment opportunities. We believe that this is likely one of those times. As legendary investor Warren Buffett has been known to say, be fearful when others are greedy and greedy when others are fearful. Quite often when markets appear at their bleakest and everyone is panicking, a focused long-term investor stands to benefit the most. As we go through this difficult experience of the COVID-19 and its profound impact on the global economy, things may seem overwhelming from time to time. However, I am grateful to have the support of my family and community to help me cope with any fear and stress I may have. In turn, the support that I receive gives me the strength to continue focusing on your well-being. I believe we are well positioned to withstand these challenging times, and I truly want you to feel confident in the rigorous planning we've done as we work together to meet your long-term goals. Thank you so much for your time. As always, thank you for keeping the faith, and thank you for not keeping us a secret. It means a lot. I hope you and your loved ones stay safe and healthy.